Florida's housing market is catching its breath. In September 2020-5, Cape Coral's home values fell 7.1% year-over-year, while statewide single-family sales rose 13.6%. That tension price is bending while transactions revive is the story. Start with the map. 4 of the 10 sharpest price declines in the United States concentrated in Southwest Florida when September 2025 was stacked against September 2024. Cape Coral was down 7.1%. Naples dropped 6.7%. Punta Gorda slipped 6.2%. Northport fell 5.1%. 2 more Florida spots, Sebring at 5.2% and Sebastian at 4.6%, rounded out the list, alongside Brownsville in Florida at 4.8%. Beyond the state's borders, Champaign, Illinois posted the steepest slide at 7.9%, while Wichita Falls, Texas, and Kahului, Hawaii cooled by 4.8% and 4.7%, respectively. The common signal: inventory has been building. Nationally, stock reached its highest level since 2019, and Florida felt that shift most sharply in places that surged the fastest during the pandemic. Those surges were not small. In parts of Southwest Florida, prices during the pandemic jumped as much as 70%. Then came a second shock. Hurricane Ian inflicted more than $112 billion in damage, the costliest hurricane in Florida history. In Ian's wake, insurance carriers raised premiums or exited the market, while property taxes and homeowners association fees climbed. That trifecta ballooning non-mortgage costs, storm risk, and pandemic highs pushed affordability to the breaking point. Zoom in to Cape Coral to see the adjustment. Realtor.com showed more than 6,500 homes for sale there. The September median list price was $427,000, but the median sold price was $350,000. That spread $77,000 between asking and closing speaks to a market where buyers have leverage. In August 2029 and 5, the average single-family home in Cape Coral sold for $350,000, down more than 7% from a year earlier, and more than 13% below August 22's pandemic-era peak. Northport's reset reached even farther. The average property there sold in August 2025 for 20% less than it did 3 years prior. Sellers who anchored to 22-1 expectations watched their homes sit. Roughly 1/3 of listings in Northport saw price reductions in the spring, while about 28% of Cape Coral postings cut prices. The correction isn't limited to sticker prices. It's baked into carrying costs. Cape Coral's premium-to-market ratio annual insurance paid relative to home value sat at 2.2%, the 3rd highest in the country. The math is blunt. A $350,000 house can carry an annual insurance bill of about $7,700. In flood and hurricane-exposed neighborhoods, coverage is not just expensive. At times, it's harder to secure. For buyers, that moves the monthly payment from possible to prohibitive. For sellers, it means the price that clears the market has to reflect the risk. Yet, even as local markets correct, the statewide pulse is steadier. In September 2027, Florida's median price for a single-family home was $410,000, the same as a year earlier. Condos and townhouses clocked a median of $299,000, a bit lower than last September. Transactions picked up. Existing single-family sales were up 13.6% year-over-year, and condo/townhouse sales rose 8%. New pending sales increased for a second month in a row. When mortgage rates eased over the summer, buyers stepped off the sidelines, reminding everyone that this market is hypersensitive to affordability. Vindentory tells a split story. A month's of supply reading, how long it would take to sell all current listings at today's pace, marks balance around 5 to 6 months. Florida's single-family segment sat at 5.1 months, a textbook equilibrium. But condos and townhouses stretched to 9.1 months, firmly in buyer's market territory. That gap traces back to higher insurance premiums, stricter maintenance rules, and rising association dues. In some buildings, a low purchase price can be overwhelmed by a special assessment. A $30,000 bill for structural repairs or a new roof can erase the savings from a discount. That's not theory. It's a line many buyers now run before they write an offer. The directional forces are not one note, and they're not all dragging demand down. In Miami, developers describe a surge from the north. Over the few months leading up to New York City's mayoral transition, one Miami firm closed more than $100 million in signed contracts from New York buyers, about twice the volume they handled a year earlier. The stated catalyst was political uncertainty. A city of 8.5 million watched a new mayor take office in November 2025, and a survey found 9% said they would definitely leave if he won. That 9% implies roughly 765,000 potential departures if even a fraction of those intentions materialize. Pair that with a September 2025 median sale price of $875,000 in New York City, up 7.9% year over year and more than double the national average. And the calculus for some capital was clear: test the waters of Florida. At the same time, migration into Florida is not a straight line. On the Gulf Coast, agents describe fewer people moving in this year, even as new construction, a rise in foreclosures, and insurers returning to the state expand the pool of available homes. A Cape Coral broker put it simply: supply is outpacing demand, especially in the Cape. The choice, he said, is more buyers or fewer listings. In that gap, pricing power shifts. That's the what. The why breaks into three parts. First, affordability. The statewide median for single-family homes at $410,000 in September 2025 is stable year over year, but the total cost of ownership isn't. Insurance is the standout. A 2.2% premium to market ratio on a $350,000 home produces that $7,700 annual bill in Cape Coral before taxes or HOA dues. Property taxes and association fees have risen too, compounding the load. A buyer who could stretch when mortgage rates were at historic lows in 2021 now faces a higher monthly payment, even if the sale price is 13% lower than August 2022. Affordability is an equation. Today, the non-mortgage terms make the math tougher. Second, risk and repricing. Hurricane Ian's $112 billion cost did more than knock out power lines. It reshaped risk models. Carriers tightened underwriting or left, and then some new providers stepped in at higher prices. Lenders, appraisers, and buyers now fold those realities into every offer. The result: a market that revalues location street by street, elevation by elevation, and coverage line by coverage line. Third, inventory dynamics. Nationally, listings reached their highest since 2019, and Florida rode that wave. In Cape Coral alone, more than 6,500 homes were on the market. That's not an abstract measure. It's a Saturday morning reality of open house signs and price cuts. Statewide, single-family inventory sits in that 5.1 months of supply pocket where neither side dominates. But condos, at 9.1 months, tip toward the buyer. Builders contributed to the rebalancing, pushing new construction into communities that saw volumes swell during the pandemic. So have distressed sales. In the third quarter of 2022-5, Cape Coral had the third highest foreclosure rate among 225 metros with at least 200,000 residents. The number of short sales and foreclosures has risen from a year earlier, adding to available stock. The consequences ripple through every segment. Sellers who tested top-of-market pricing in the spring watched buyers scroll past. Northport had about one-third of listings cut prices. Cape Coral's 28% rate of price reductions was right behind. Some owners chose to delist and wait. Others sharpened their pencils, fixed deferred maintenance, and priced to where the offers were. A president of a local realtor association made the point that sales volumes are still moving and that the cooling is most visible in prices, not in the count of transactions. It echoes the statewide data. Sales up double digits for single-family homes, prices leveling at $410,000. The human side of this shows up in small exchanges at the kitchen table. A Cape Coral agent describes conversations where buyers can now distinguish between a well-priced and an overpriced home. Sellers anchored to 2021 are nudged toward reality. Another agent says the buyers haven't vanished, they're just more discerning. The difference is distance between list and close. That $427,000 median list in September and $350,000 median sold price mapped the new terrain. The condo story is its own plotline. With 9.1 months of supply statewide, that segment leans toward the buyer. Insurance premiums, new safety rules, and rising monthly dues weigh on affordability. Financing can be trickier in buildings with reserve shortfalls. The advice is homework. A spreadsheet of association reserves and planned assessments can be worth more than a glossy brochure. A $30,000 surprise levy for structural work can turn a deal into a liability. The opportunity is there, more inventory, more negotiating room, but the diligence bar is higher. Markets don't move in one direction all at once. On the Atlantic side, Miami is absorbing capital flows tied to political shifts more than weather patterns. The reported $100 million in New York sourced signed contracts over a few months leading into November 2025 is not noise. It's fuel for specific submarkets. In Broward and Miami-Dade corridors, that demand can insulate prices even as nearby communities adjust. On the Gulf Coast, seasonal rhythms still matter. Agents expect sales to pick up as snowbird season arrives, with a January through March window that historically brings more foot traffic and flight bookings than most months. Local buyers and sellers plan around that cadence. The difference this winter is the spread. With more than 6,500 Cape Coral listings and price cuts running through roughly a quarter to a third of the market in parts of Southwest Florida, the selection will be wider. The conversation will be less about beating 10 offers at once and more about meeting the market. The national backdrop adds pressure. A recent estimate pegs the United States as short roughly 4.7 million homes. A separate calculation puts the income needed to afford a median-priced home across the country at about $118,530, more than 50% above a median household income, around $77,700. Those numbers explain why Florida's price level can hold even when specific metros cool. Demand doesn't disappear, it repositions. It trades downtown for suburban. It swaps condo fees for a single-family policy. It floats from New York, where September 2027 saw a median sale price of $875,000, up 7.9% year over year, to an Ocean View pre-construction contract in South Florida. The mechanics of a Florida offer in late 2025 look like this. If you're shopping single-family, months of supply at 5.1 tells you competition is moderate. If you're shopping condos, 9.1 months says you have time and options. If you're shopping in Cape Coral or Naples, a September decline of 7.1% or 6.7% year over year hints that sellers will listen. If you're shopping in Northport, the 5.1% annual slide and the one-third rate of springtime price cuts suggest you can negotiate on inspection items and closing timelines. And if your target is Miami new construction, the $100 million wave of signed contracts from New Yorkers signals that pricing power may be firmer in specific towers and neighborhoods. Buyers planning their budget need to fold in the 2.2% premium to market ratio reality in Cape Coral as a proxy for storm-exposed areas. That $7,700 per year for a $350,000 home is likely higher than what your pre-approval calculator assumes when it focuses on principal and interest. Sellers, for their part, need to recognize that a $427,000 median listing price doesn't guarantee a $427,000 contract. The September median close of $350,000 says buyers will push back where insurance, taxes, and dues tip the math. Some signals suggest stabilization ahead rather than a cliff. The statewide median single-family price at $410,000 matching last September's level is 1. The 13.6% jump in single-family sales and 8% rise in condo/townhouse sales are another. When rates dipped over the summer, new pending sales rose for a second consecutive month, a forward-looking marker that the pipeline isn't empty. Forecasts for the next 12 months point to prices largely moving sideways, with some areas posting 1 to 3% gains and others seeing a 1 to 2% dip. In practice, that means a market that rewards precision. Buyers who know the comp set, the insurance quote, and the association's reserve study will move faster. Sellers who price to value, not memory, will transact. The risks are clear and they're measurable. One watch item is insurance capacity and cost through 2026. If premium-to-market ratios in storm-prone metros remain near 2.2% or climb, affordability will tighten, especially in condos with 9.1 months of supply. Conversely, if new carriers expand and pricing stabilizes, that friction eases. A second watch item is migration flow into and within Florida over the next 12 months. If the $100 million contract surge from New York buyers turns from a burst into a trend, Miami and nearby markets could see firmer pricing than the Gulf Coast. If, instead, the earlier narrative of fewer people moving into Florida persists in those southwest metros, price corrections in Cape Coral, Naples, and Northport could extend until supply and demand align. There's also a credit market thread to watch. The third highest foreclosure rate in the Cape Coral metro in the third quarter of 2025 is a warning to lenders and local governance to monitor stress. If distressed sales continue to tick up into 22.6, they can keep inventory elevated and nudge comparable sales lower in certain neighborhoods. But if volumes stabilize and buyers absorb the available bank-owned and short-sale inventory, the drag fades. None of this plays out in a vacuum. Florida's condo segment remains the most buyer-friendly, with 9.1 months of supply and softening prices. The single-family segment, at 5.1 months, already sits in a balance zone. Statewide median pricing tells the base case: $410,000 for single-family homes in September 2025, a flat line that marks an end to the rapid climb and the sharp drops. In Cape Coral, the August sale price of $350,000, down more than 7% year-over-year and more than 13% from August 2022, shows a correction in motion. In Northport, the 20% slide over 3 years underscores the scope. In Naples and Punta Gorda, declines of 6.7% and 6.2% as of September against last September map the arc in premier Gulf Coast enclaves. For would-be buyers, this is a window. There are more than 6,500 listings in Cape Coral. In Northport, about a third of listings cut asking in the spring. In Cape Coral, 28% did. The spread between a $427,000 median list and a $350,000 median close in September is leverage you can measure. If you're financed, be ready to lock quickly when rates ease. New pending sales rose 2 months in a row when they did. If you're cash, you hold the option to move fast on an insurance-favored lot or a well-funded association. For would-be sellers, this is a strategy game. Price to the market you're in, not the one you remember. A realistic ask, clean inspection readiness, and clarity on insurance transfers and HOA reserves can be worth more than an extra few $1,000s of list price. In Cape Coral, a broker put it plainly: inventory exceeds demand. In the winter months, January through March, foot traffic jumps as snowbirds arrive. That's your best shot at speed, but only if your number meets the buyer's spreadsheet. For renters considering a purchase, the math is nuanced. A national snapshot shows it takes about $118,530 in household income to afford a median-priced American home today versus a median household income around $700. That gap explains why Florida's normalization, not a collapse, is the likeliest path. The supply shortfall nationally estimated around 4.7 million homes buffers values. Florida's long-run draw remains. But in the near term, local conditions rule. If you're tracking Miami's new influx, keep one eye on New York City's pricing. In September 2027, the median sale there was $875,000, up 7.9% year over year. If even a fraction of that city's 8.5 million population acts on the 9% who said they'd definitely decamp after the election, South Florida's luxury and upper mid-tiers could see sustained demand. If those intentions cool with time, the spike could flatten. Both are possible. The 100 million tally over a few months shows what a political catalyst can do. If you're tracking the Gulf Coast, watch the insurance quotes. A 2.2% premium-to-market ratio in Cape Coral can be the line between yes and no. As carriers come and go, as underwriting tightens or loosens, the monthly equation changes. If insurance stabilizes as new providers enter, the floor underpricing strengthens. If rates keep climbing for high-risk zip codes, the correction continues until buyer spreadsheets match seller expectations. If you're eyeing condos, dig into association financials. A 9.1-month supply gives leverage. Use it. Ask whether reserves are fully funded. Ask if a $30,000 assessment looms. Each answer moves your true cost basis more than a small price cut. If you're in lending, set your assumptions for Cape Coral and similar markets with an eye on the third quarter foreclosure ranking. Risk layering matters when prices slip 7.1% year over year and inventory tops 6,500 units. If you're in development, align your starts with the 5.1 months of supply in single family. That's balance, not scarcity. Projects penciled at 2026.1 pricing need 2025 realism. What happens next? The base case is a Florida market that normalizes through the next 12 months. Statewide single-family prices hover around that $410,000 median and drift in a narrow band. Some metros, particularly those pulling in out-of-state capital post, a 1 to 3% gain. Others, especially where insurance prices out buyers, see a 1% to 2% dip. Sales volumes remain sensitive to rates, spiking when they ease and slowing when they rise. Pending contracts keep telegraphing those shifts a few weeks early, just as they did when they increased for 2 consecutive months after summer's rate relief. 2 risks sit at the top of the board. One is insurance. Track premium-to-market ratios and carrier participation through the back half of 2026. If premiums stabilize or slip, affordability improves and demand firms, especially in condos, with today's 9.1 months of supply. If premiums climb, particularly in storm-exposed corridors like Cape Coral, Naples, and Punta Gorda, price corrections could extend into late 2022-6. The other is migration. Over the next year, watch whether the $100 million in New York-driven Miami contracts was a brief surge or the start of a wave. If survey sentiment, 9% definitely, leaving in a city of 8.5 million, translates into action, Miami and Fort Lauderdale could carry stronger price floors than Gulf Coast peers. If inbound flows into Southwest Florida remain light, regions posting September declines of 7.1% in Cape Coral and 6.7% in Naples might see a longer path to equilibrium. Between those bookends, Florida has shifted from breakneck to balanced. Single-family inventory at 5.1 months says neither side has the upper hand. A $410,000 statewide median says the frenzy is over and the floor is set. In the places that ran the fastest up as much as 70% during the pandemic, prices are now rewriting. In the places drawing fresh capital, $100 million in a few months from New York, prices are steadying or holding. Call it a reset. Not a freefall, not a boom, a market where the numbers matter again. 7.1% down in Cape Coral in September year over year, $350,000 closing into August, $427,000 asking across September, 6,500 listings, 2.2% premium to market ratio, $7,700 annual insurance on a $350,000 house, 13.6% more single-family sales statewide in September, 9.1 months of condo supply, $299,000 condo median, a $410,000 single-family median that matched last year. Each number a piece of the same picture. If you want more data-driven deep dives on Florida real estate, join us for the next one.